Good afternoon. This is Tom Alexander. This is the weekend update for the week of January 20th. Today is January 20th. It is a holiday in the U.S. It is Monday, January 20th. This is for the following week. Uh, if you have not, if you're just finding me for the first time on YouTube, let me show you something. You can go to alexandertrading.com. You can click on weekly update and you can get previous reports. This is this weekend's report. It includes a PDF you can download that will have the levels that we're going to go over. Also has a link to the video, and the same information is available going back a couple of years for these reports. Also, by the way, I just published a new book on day trading using auction market principles. It is very different than anything that you've seen out there. I've been trading for 40 years in front of a trading screen, and it does make a difference. I am a screen-based trader and have been for 40 years. So I hope you will avail yourself of that opportunity. You can click here. You can see more information about it. Let's get into this week. Okay, so let's go here. Let me make sure I'm on the right page. Yes, I am. Okay, so here are the primary U.S. indices. I'm going to do a different view here. That's not the view I wanted. Here we go. Okay. Now, here are the four primary U.S. indices, and I'll show you the New York Composite in a minute. That would be the fifth primary U.S. index. But you have the SPX, the NDX, the Dow, and the Russell. And you can see here in the SPX, we are less than 2% from a new all-time high. We're about 3.3% from a new all-time high in the NDX, about 7.8% in the Dow, and 14% in the Russell. Now, why is this important? Well, in strong bull trends, everything is pretty much in lockstep and everything is pretty close in terms of where it is, both from a market structure perspective as well as a relative performance perspective. And really until the late December high, we'd spent most of this bull run off of the October 2023 low, with a huge disparity, in particular with the Russell underperforming. Well, now we have that underperformance showing up again, and it's not just in the Russell. It's to varying degrees among all the indices, but all of a sudden the SPX is leading the charge higher. For most of the past year or two or more, the NDX has led things higher. So we're beginning the year with this disparity in terms of performance among the indices, which brings into question what is the larger degree trend. Um, and we'll get more into that, but it should be noted that in the SP in all the indices now, we've made lower lows and lower highs. That is about as objective a way of identifying the direction of a trend as you can get. And we'll cover a little bit more of that in just a minute. I want to go back to here. Here's the New York Composite. It's in a similar position as the others. Let's just see how far we are away from the close to a new all-time print high. Well, not that far, about 4%. So the SPX obviously is leading the charge higher. It's quite possible we could trade to a new all-time high in the SPX and nothing else, at least initially. That would set up an interesting situation. It would set up a divergence among the indices that would not stand. Now, that doesn't necessarily mean it would be bearish, but it would put the other indices on a clock to catch up, or it would be marking a potential high. Okay, let's take a look at some of the internals. Well, we landed on VIX, so we'll talk about VIX first. VIX did come in some on Friday. VIX closed at 1581, but it's still, you can see here, it's relatively elevated compared to times when in the past year or two when we've had these bull runs. So we will see what happens with VIX as the week goes on. There's a lot of room for VIX to contract or expand here. All right, another thing I want to take a look at that we use is NYSE data, in particular NYSE advancing and declining issues, and breadth itself. The blue histogram is breadth. Breadth, as you can see, has been up now 5 consecutive days. The 5-day moving average of NYSE advancing issues, which is the green line here, is on the lower cusp of an upper extreme from where you, especially in a bear trend, you can start looking for highs of some magnitude. The 10-day it still has room to run higher, but you can see here we've had quite the ramp off of the low from the 13th. I want to show this view. Now this is the low of the 13th, and let's just see how far up we are in a week's time. From print low to print high, a little more than 4%. But you can also see on the 30-minute chart here. Now, this is the SPX 30-minute cash chart. This is breadth, NYSE, advancing minus declining issues below it. This is the all-time high back in December. You can see we've made a series of lower highs into Friday's high. Now, we're not too far above this pivot high here, so we could see that taken out. Another thing that I will point out here is we have this gap from Friday. We have this gap from, I think, don't recall if this was Tuesday or Wednesday, but the more this thing gaps, the less you're expecting that most recent gap to hold. Yes, all gaps do eventually usually get filled, not always. I'm not one of these people. I don't think that you can rote trade gaps. I think gaps, taken in an auction market context, can help you read the enthusiasm for the market. But when you have a trend that's up 4% and you have a market that's continuing to gap, you're starting to get into potential exhaustion type of phase. So we shall see what the day brings, what the week brings. A couple of notes on exogenous events. We have a new president being sworn in today, a new administration coming in. How the market has obviously been digesting that already, but I think there has potential to be even more digestion next week, depending on which way the wind blows and how the institutions feel. Policy changes will affect the markets and interest rates and all these other things. So that's still up in the air there, and it could increase volatility in the market over the next week or so. We shall see. I hope you guys have found value in this. If so, I would very much appreciate it if you would like and subscribe to the channel. I will speak with you again next week.